Your IEEE membership means access to insurance products featuring exclusive group rates, flexible benefit options, and portable coverage that stays with you throughout your career. Engineered to help protect your loved ones and your financial security. For more information, go to IEEEinsurance.com.
Good afternoon, everyone, and welcome to IEEE-USA's webinar, Your Financial Safety Net, Unlocking IEEE's Member Group Insurance. We're glad you can join us. I'm your host, Jonathan Cho. We'd like to take this time to thank our sponsors, AMBA and the IEEE Member Group Insurance Program, for supporting today's webinar. Our presenter for today's webinar is Graham Fuller, returning to share even more valuable insights on how to confidently safeguard your future by strengthening your financial safety net. Graham is Senior Vice President and part of AMBA's leadership team with a focus on client and carrier relationship management leadership. His overall responsibilities include managing the relationships of AMBA's largest clients and carrier partners, designing group insurance benefit association members in the United States and Canada. Mr. Fuller has more than 29 years of insurance program management experience with AMBA and has been a leader in client management and carrier relations for 25 years. Without further ado, I'll now pass it off to our presenter. Welcome back, Graham. We're very excited to hear what you have in store for our audience today.
All right. Well, good afternoon, everyone, and thanks, Jonathan. I appreciate that. As Jonathan mentioned, my name's Graham Fuller. I'm part of AMBA's senior leadership team. For those of you who don't know, AMBA has proudly been the IEEE Member Group Insurance Program's insurance administrator since 1960. We have served thousands of IEEE members and their families in the United States, Canada, and Puerto Rico. Before I begin today's webinar, however, I would like to give special thanks to Emily Surratt, Gil Gilmore, and Karen Connor at IEEE headquarters in Piscataway, New Jersey, as well as Daryl Griffin, our friend Jonathan, and John Yaglenski at IEEE-USA. Without these people, we could not make this opportunity possible. So again, wanted to thank them individually as we greatly appreciate this. That said, turning into the webinar, the purpose of today's webinar is really to help you discover how the group insurance program and the group insurance plan sponsored by IEEE provide a critical layer of financial security. In the webinar today, we're going to try to simplify your options from life and disability insurance to coverage that fills gaps in your personal insurance portfolio, and really show you how to leverage the group buying power of IEEE for rates and peace of mind. Again, my name is Graham. I'm going to take you through the agenda real quick. On today's webinar, we're going to look at 5 elemental facets of the insurance program. So we're going to take a look at life insurance. We're going to talk about disability income replacement insurance. We're going to talk a little bit about dental insurance, and then professional liability insurance. And at the end, we'll talk some about the IEEE Member Group Insurance Program as a whole. So Jonathan, if you wouldn't mind, appreciate it if you move it to the next slide, please. Jonathan, if you wouldn't mind, please move it to the next slide. Thank you. First and foremost, life insurance. Let's talk a little bit about that. And really, the question that everyone asks is, what is it? And I think a lot of us kind of know what life insurance is, but really life insurance, it's a legal contract. And it's a legal contract between the policyholder and an insurance company. And in exchange for the regular insurance premium payments made by the policyholder, the company will promise then to pay a sum of money, which is called a death benefit, to chosen beneficiaries and policyholders when the policyholder passes away. Jonathan, next slide, please. All right, thank you. The second question that we need to answer, and this is more complex, is what does life insurance do? Now, there is a common misconception, partially correct, however, that life insurance is just burial insurance, but really it's more than that. It's a mechanism to continue surviving beneficiaries' ways of life and pay off accumulated debts and expense obligations. Kind of looking at the slide specifically, yes, it does pay for burial. We'll talk a little bit more about that, and I'm going to share some statistics on that. But really, life insurance also provides cash to replace lost income, Social Security or pension benefits. The second column that we're looking at is life insurance also helps to pay off large debts. There is a common misconception that once we pass away, that we are debt free, we are absolved of those debts. Nothing could be really farther from the truth. Those debts are still outstanding and they must be paid. So life insurance proceeds can really be used to pay off mortgages, student loans, credit cards, car loans, business loans, or long-term care expenses. Also focusing in a little bit on the final expenses, interment and cremation. Yes, life insurance will pay for that, but I think it's really important to talk about some statistics, some very interesting statistics that I found on this, and I'd like to share them with you. And this is about funeral expenses as a whole. In 2025, the cost of a traditional funeral with burial and viewing has a national median of $8,300. While cremation with the service is a little bit more affordable at $6,200. However, the final cost on this can vary significantly based on your location and specific services you choose. So if you're adding cemetery costs, that can go to $10,000 or even more. If you're adding on a burial plot, $10,000 to $15,000, and these are just national averages. Again, it's really important to understand that life insurance, it will cover this for your family in this specific time. But let's also turn a little bit to what else can life insurance pay for? And this is really important. Life insurance proceeds can also be used for creating and leaving a legacy. It can pay for college expenses for children, charitable causes, or even philanthropic donations. For example, IEEE has a wonderful foundation, the IEEE Foundation, and we see a lot of times members will donate to that. So creating that legacy also is something that life insurance can help pay for. But finally, this really all lends itself to giving peace of mind to your family. And you really want to leave them in a situation where their way of life, it doesn't change. And they're not left to deal with, additional financial worries, stresses. There is enough on a family's plate as they're going through this difficult time. So making sure that you have life insurance in place really is important. Jonathan, if you wouldn't mind going to the next slide, please. Next slide, I kind of wanted to talk about, who really should consider life insurance and really when it should be considered. We're going to talk about those specific groups and those specific times when someone should be considering it. I would tell you, editorially speaking, that we should always be thinking about it because obviously life happens, life changes, and we need to be prepared for that. But before we get into that, wanted to talk a little bit about life insurance and how it is and the statistics and data around it nationally. So death, it's important because death benefits paid by U.S. life insurers remain approximately 14% above 2019 levels. Now, after a decline between 2022 and 2024, death benefits saw a 6.5% increase in the first half of 2025 compared to that same period in 2024, which suggests a new higher baseline for mortality. So based on that, studies are also showing that there is a widespread need for coverage. So about 42% of American adults, which is roughly 102 million people, feel that either they don't have enough life insurance or they don't have any at all. And that leads us into what is called a stable perceived need. So the proportion of people who feel they need life insurance has remained stable, with 30% of those without a policy acknowledging that they need something, right? And another little tidbit that I'd like to share with everyone today, as far as life insurance ownership rates, and this is particularly fascinating. If you look at demographics, there is a key stat here that between 51 and 52% of overall US adults have some form of life insurance. Now, that means there's, in this statistic, that's also 74 million uninsured adults, which could benefit from the coverage. If you look at this generationally speaking, baby boomers are the most insured group. I don't think that surprises a lot of individuals. Between 57 and 58% of baby boomers own some form of life insurance, so good for them for being prepared. The next higher ownership rate is just exactly what everyone would assume. Gen X then comes in second. Millennials are kind of, they're there, that age area of 28 to 43, there's about 50% of the millennials who have life insurance. Gen Z, they're still lagging a little bit with 36 to 40% ownership and loss in life insurance. But the great thing about Gen Z is they are understanding that they need it. Even though only 36% to 40% own life insurance, 49% of members of Gen Z feel they need more coverage. So they're really thinking in a positive trajectory on that, and I like that. But again, this is something, just some key statistics that I felt everyone should know today, because there is a need. There is also a recognized need for more. So I'm going to pause there. We're going to kind of shift back to the slide and talk about who should be considering life insurance and when it should be considered. So first off, I would tell you everyone should be considering life insurance at all times. But there are specific pockets of, or groups rather, that should really be paying attention to this. So first, married or partnered couples. Many partners find it exceptionally difficult to make ends meet without the other earner's income in the picture. So specifically important for couples to be thinking about it. Even more important, married or partnered couples with children. So in addition to losing one partner's income, a surviving parent really might have to pay for childcare and more without the other parent around to pitch in and having that other source of income. So another great thing to keep in mind, what happens if one of the partners or one of that couple were to pass away? You're going to have to find an income source, and life insurance would be that specific well. Single parents, without question, as the sole income earner for a family, single parents really want to think about how to replace, your child's only source of financial support. Now, I would also grant this group that single parents generally are on more of a fixed income. Not all, but in order to pay for that, obviously there might be some budgetary constraints. The good news is that there are life insurance policies out there, and we're going to talk about some of them coming up, that could meet a single parent's budget. So there is always a way to fill that gap and provide for that need. Fourthly, stay-at-home parents. So from cooking meals to shuttling kids to school to helping with homework, stay-at-home parents really perform kind of those critical responsibilities that could be so costly to outsource in the event of a loss. Empty nesters, many surviving partners wouldn't be able to maintain that lifestyle that they as a couple work so hard to achieve without life insurance. And then finally, this is specifically very important, retirees. And depending on the size of the estate, beneficiaries, your heirs, they could really be hit with an estate tax rate of, as high as 45%. Now, fortunately, cash from a life insurance policy gives heirs access to tax-free money to pay for those costs. But those are really the groups that we have to step back and say, these are the folks that really should be considering it. But then as we move into kind of some rules of the road, like when to consider this, and this I think transcends all the groups. It applies to everyone. When you get married, if you have children, if you're caring for a relative, if you buy a new home, or if you're changing jobs, or even if you get promoted, your income's going to change. So you need to find a way to protect that and provide for that in the event you were to pass away. If you're starting a business, or if you're even planning for retirement, all of those are great, kind of some great boxes to check and some great benchmarks to follow as to when you should consider changing your, buying more life insurance. Sometimes you have to reduce a little. We'll talk about that in a little bit. But again, some general rules of the road when we're talking about, when should I consider a change in my life insurance coverage? Jonathan, if you wouldn't mind, let's go to the next screen. Thank you. Now, I wanted to pivot into the types of life insurance that are out there. Now, there are other types than what I am describing today. I am specifically focusing on those types of life insurance that are sponsored by the IEEE member group insurance program. So the first type, and this I would say is probably the bedrock of life insurance, if you will, is what they call annual renewable term insurance. It's also known as term life insurance. In some cases, people call it ART insurance. But annual renewable term life insurance, it's a type of term life policy that provides coverage for 1 year at a time. And at the end of each year, the good news is you can renew the policy for another year without having to prove you're still healthy, no underwriting. It's an automatically renewed policy. The key characteristic about term life insurance, however, is that the premiums start low, and that's a good thing, especially for individuals in younger age categories, but they increase every 5 years as you get older. So again, that's how term life is modeled out. But again, as we step back and say, well, okay, that's great, but who really needs it? Does everyone need it? I would suggest to you that it depends. And so I've really tried to identify 3 areas of groups that need it. So who needs it? Well, if you're in a situation where you have a short-term temporary need, where coverage is needed for a specific period, maybe 5 years or 10 years or whatever, where a 10 or a 20-year level term policy would be too expensive, that would be someone who would need annual renewable term. Also, annual renewable term is kind of a bridge to more of a permanent plan. So you might be in an age category or in an income situation where you know you need permanent life insurance like whole life or universal life, but you can't afford the premiums at the moment. So you can use a low-cost term life plan to ensure you have some coverage while you save up. And then at that point, you can enter into a contract where you're purchasing more of a permanent plan that has cash value and features that aren't really associated with an ART plan. And finally, and this I think is the most important, is the people who need this are young people who are on a tight budget. So if you're a recent graduate or young professional who needs a high death benefit, maybe you have to cover a mortgage, or you've got young kids, but you have a very limited budget, term life is really designed for that demographic. So those younger folks are betting that their income will rise faster than the premiums, and they're able to provide some sort of coverage for their family to pay off mortgages, etc., in a short term. That said, Jonathan, if you wouldn't mind, let's go to the next page. All right. Thank you. I think we've already, Jonathan, if you would mind moving to the next page, please. There we go. All right. The next type of life insurance, and where there's actually 2 specific types, but I'm combining them for purposes of this presentation into one, is a 10 and a 20-year level term life plan. And these are the plans that many of you have probably heard about in the news. You see advertisements for. These are in the marketplace, some of the fastest growing plans in the United States at the moment. So for those of you who aren't familiar with them, a 10 or a 20-year level term plan is a policy that's going to guarantee 2 items for a set period, whether it's 10 or 20. Number one, it's going to guarantee you a level death benefit. So the amount your beneficiaries receive if you pass away is going to remain consistent. In a lot of regular term life plans, you can see benefit decreases the older you get. This prevents that from happening, and you are locked into that benefit level. The next thing that it guarantees is a level premium. So the amount you pay each month or year is going to stay exactly the same for the entire term. So these plans start at a little more of a high price point, but you are really locking in value over time because you're guaranteeing a premium and a benefit amount. So after that, after the 10 or 20-year period ends, the coverage will terminate. However, you can convert the policy. Most policies have conversion options. The IEEE endorsed plan does, of course. So you can either you can convert the policy into another 10 or a 20-year plan, or you can, just go out and buy a new one. So those are some unique features of 10 or 20-year term plans. But really, who needs it? We'll just kind of go through this quickly here. Individuals who are trying to pay off a specific debt, so a personal loan, a car loan within a finite period of time, 10, 20 years, these types of plans are perfect for that. Businesses that have a defined timeline and they need to cover key persons for a specific project, another great way to insure would be through a 10 or a 20-year plan. Now, this might seem a little bit counterintuitive, but young families on a very tight budget, where a 20-year, say, is probably more expensive, they can still lock in value over time if they're able to afford that. So it's a counterintuitive way of thinking about it, but if you're looking at it from a value over time perspective, this might be a product that is right for that type of individual. Next, and this is the most common reason, is income replacement. So it's going to ensure that if a primary earner passes away, the survivors have a financial support mechanism for the entire period that the children are growing up. This also is a perfect way to, fund children's education. It's going to guarantee that money's going to be available for college tuition, even if a parent passes away where the children are young. And also, and this kind of ties back to the previous slide, stay-at-home parents. It can cover significant expenses of childcare and household management that would need to be replaced. So again, these three plans, term life, 10-year, and 20-year, they are all available through the IEEE member group insurance plan. There are other programs out there, but we feel that this is the best. This next slide, Jonathan, if you wouldn't mind moving to that, I'd appreciate it. We'll talk a little bit about that. All right, thank you. This slide, and this slide is one of my favorite slides because I get to talk about the ART plan that is available to IEEE members through IEEE, AMBA, and New York Life. So really what you see is some of the highlights of this plan that are available through the IEEE member group insurance program. Again, this plan can provide up to $1 million in coverage. Currently, it offers a 10% premium credit. It also offers volume credits depending on how much coverage you buy. It offers a waiver of premium for disability. So if you are disabled and that is certified, then your premiums would be waived. There is an accelerated death benefit for terminal illness, and this is something that's a little bit more unique in the market. If you have certain conditions, that are certified by a doctor, this plan, you can use some of those death benefit proceeds to help offset near-term hospital expenses or hospital costs. There's a chronic illness rider. There's also a 30-day free look at the policy. So that's really important that an individual will have a chance to evaluate. And if it's something, and we certainly think that these policies are right for folks, but if there's some reason that it's not, you get that 30-day free look. Most importantly, and I think this is really important to talk about with the IEEE member group insurance program, is that this plan, we have something called Quick Decision through New York Life, which is the underwriter of the program. And Quick Decision is really a simple online tool that expedites the application process, and it allows IEEE members to apply for up to $1 million if they're age 49 or under. Now, if they're above that age category, you could still apply online. That's great. We just have this quick decision feature that would allow a decision within 30 minutes or less. So IEEE, New York Life, and AMBA continues to work for the IEEE members, making the experience expedited and more convenient to fit your schedule and when you want to apply for insurance. Take a quick pause there. Jonathan, if you wouldn't mind moving on to the next slide. Thank you. The next area that we're going to focus on is disability income insurance. And disability income insurance is essentially income replacement. It ensures that if a sickness or an injury takes away your ability to earn a living, an individual still has money coming in to pay the bills and maintain a standard way of living. In my mind, and I have to be, I will be selfish when I say this. This is a passion of mine. Disability insurance, I believe, is a fundamental pillar of sound financial planning, right along with life insurance. So we're going to talk a little bit about that, but I want to just take a moment and talk about some statistics that have been provided through the Social Security Administration and the Council of Disability Awareness. And I just want to kind of bring this to everyone's attention, just to kind of re-emphasize the fact that how important this is. So the first thing that I'd like to share with the group today is kind of what we see as far as disability risk. According to the Social Security Administration, 1 in 4, so 25% of today's 20-year-olds will become disabled before retirement age. That's a staggering statistic. A lot of people, when we are in our 20s, I wish I was back there, but we're no, certainly not. Individuals in that age category, it's just shocking to know that, the risk of disability for them is exceptionally high. Further, 51 million working adults have no private long-term disability insurance. Now that statistic comes from the Council for Disability Awareness, but that number right there really should be alarming to all of us, because people are working without any type of safety net should something happen to them and impact their ability to earn. And we're going to talk about that impact on the ability to earn shortly. Also, individuals who are not, if you're not familiar with it, there are some common long-term disability claims. Some of the benchmarking data that was provided by Integrated Benefits Institute shows that, and this surprises people, that 25% of long-term disability claims come from musculoskeletal disorders. Next in line are just simple on-the-job injuries. That's 13%. Mental health, and then circulatory diseases. I think there is a misconception that a lot of long-term disability claims come from people being injured on the job. That is not the case, and that data speaks to it. Another thing I wanted to talk about quickly is, and this is specifically important in how it pertains to the IEEE member group insurance program. Most understand that employers are a key source for long-term disability insurance. Now, while they are a key source, access is not universal. Only, and this is another data point that is crucial here. Only about 35% of private sector workers have access to employer-sponsored long-term disability insurance, and that coverage often has limitations. There is a group out there, they're called LIMRA. One of their studies found that while benefits are valued, less than half of workers feel they have a strong understanding of them, indicating a need for better employee education. Now, I mention this to this group because there is a huge focus on long-term disability insurance that you can get through your employer. But the IEEE member group insurance program has a freestanding plan. We'll talk a little bit about that in a minute, that is not tied to your employer, and it's fully portable, which means you can take it wherever you go. So we'll talk about that in a minute. But I want to kind of turn back again to disability and talk about how households cope without coverage. Interestingly enough, if a primary earner becomes disabled, 51% of households deplete their personal savings. 26% would have to tap into retirement funds, and 21% would rely on credit cards or loans in order to make ends meet. Now, that's according to a 2025 Insurance Barometer study, but that really underscores the financial vulnerability that many face. It also speaks to why having disability insurance is so important. Now, with that, let's go to the next slide, Jonathan. I'd like to talk a little bit about disability insurance as a whole. I have given many talks throughout the United States to folks, and I ask them one simple question when we're talking about disability income insurance, and that's, what's your greatest asset? And I get all kinds of great answers. And I can see where people, why they answer the way they do. What's your greatest asset? Well, it's my house. It's my car. It's the property I live on. It's my boat. All perfectly expected answers, but really they're incorrect. The right answer to this in every scenario is a person's greatest asset is the ability to earn income, the ability to earn a paycheck. And I say this because the ability to earn is the greatest asset, because without that ability to earn, material assets just simply can't be acquired. And because of that, disability insurance is a foundational cornerstone of a disability needs pyramid. And you'll see that in the center of your screen. So if we look at a pyramid and what the foundation is, it's always income plus disability insurance. On top of that, you layer life, health, property insurance. On top of that, your retirement plans, investments, savings, and then with the apex of that pyramid being the ability to pass on assets, it is just absolutely critical that that ability to earn be protected, and everything else falls on top of that, because without that, there really is nothing. Let's take a quick look and talk about some of the basics of disability insurance. So number one, disability insurance, it's really going to replace income based on a flat dollar amount up to a maximum percentage of your salary. It's usually about 60%. The benefits are paid after a specified period of disability. Some people call it a deductible period. It's commonly known as an elimination period, and that can be anywhere from 30 to 360 calendar days. As far as the benefits are concerned, it will pay for a specified length of time. So a benefit duration can be anywhere from 2 years to Social Security normal retirement age. Another feature of the policies is that they can include an own occupation period during which the criteria to meet the definition of disability are based solely on your own occupation, after which the definition is based on any occupation. Another great feature is that benefits are not taxable to the claimant. So those are some basics. Jonathan, why don't we go to the next slide, please? When we're talking about, okay, I'm looking at a disability income insurance replacement policy. How do I calculate this benefit? Where do I start? Here are some good pointers as to where you should start looking and when you should begin. First of all, you have to determine the amount of asset protection you have in place. So it's not just based on your salary. You have to think about, do you have a group disability policy? Do you have an individual disability policy? Do you have other insurance? Is it worksite or voluntary? You also need to factor in savings, vacation time, and sick time, because those two elements are going to factor in, you might be paid for vacation time, so there could be income coming in. That plays a part into determining, what the benefit amount should be. You also need to really carefully review how each of those plans work individually and combined, and really watch out for other income offset sections in policies. Also calculating how much of your income is actually replaced based on the benefit maximum. You need to factor in taxability of your group disability benefits. You need to determine if you anticipate other sources of post-disability income. Also needing to calculate your monthly financial obligations, whether it's rent, utilities, food, gas and transportation, cable, internet, all of those factor into what the best benefit is for you. So I would encourage everyone, as they sit down, if they're thinking about purchasing a policy, keep those things in mind to help you guide your way. Jonathan, let's go to the next page, please. Now, the disability plan through the IEEE member group insurance program, we've got some good news. So the plan itself isn't employer sponsored, so it's not tied. You heard me talk about how it is portable, so you could take it with you wherever you go. This is going to pay a benefit in addition to your group employer benefit in order to achieve a higher income replacement percentage. As far as the IEEE member group plan is concerned, your annual gross earned income must be at least $20,000 to be eligible to apply. One of the, and I get excited about this because IEEE, AMBA, and New York Life have done a great job at this. We took a look, and based on member feedback, and we heard members, we were able to increase the monthly benefit maximum up to $10,010. Now, again, this is going to depend on your personal situation and the information that you provide the underwriter, New York Life, because these plans are fully underwritten. But we were able to respond to member feedback and have New York Life increase those monthly benefit amounts. Now, I will say that members age 67 to 69 can't request a monthly benefit option in excess of $4,940, but there is still protection there. The group benefits, they are generally taxable. With respect to an individual plan, this is post-tax, so that's some other good news, another advantage. So talking about taxes, after taxes, income replacement is usually closer to 47% rather than 60% that most of the disability plans pay for. And again, and this is the great news about this plan, is individual policies are paid with post-tax dollars, so it is a non-taxable benefit. Again, and for purposes of this presentation, all of this is subjective to the individual. I would encourage you, certainly you can contact AMBA and talk to a benefit counselor about that, but I'd also encourage everyone to talk to a financial planner and really have those conversations with them so they can give you a greater perspective on this and talk to you as it pertains to your specific situation. Jonathan, why don't we go ahead to the next area that I'd like to cover today, and that's really to talk about dental insurance. Now, with respect to dental insurance, I think we're all familiar with what it does. Obviously, it's a form of health insurance designed to offset the costs associated with dental care. It's going to work by, sharing the financial burden between the policyholder and the insurance company, and sometimes, making routine and unexpected dental treatments more affordable. If you have recently been to the dentist, you will know these expenses are not cheap. And so having said that, it's important to think about, if you don't have dental insurance, start thinking about it. It's interesting to note that 72 million US adults do not have dental insurance. That's 27% of the adult population. That statistic comes from a source called CareQuest Institute. I think what's also, it's alarming is that children without dental benefits, that's about, 10%. Seniors without dental benefits, 56% of the seniors in America don't have dental benefits. All of this comes from the American Dental Association, by the way. And despite the fact that we see market growth with dental insurance, access to dental insurance remains a significantly large challenge for many segments of the population. Again, like I said, the number of adults without dental insurance, which is about 72 million, it's nearly 3 times the number without health insurance. And when we're talking about limited public coverage, traditional Medicare, and this is important, traditional Medicare doesn't include routine dental services, and Medicaid adult dental coverage is optional and varies drastically by state, leaving a lot of folks without that type of critical coverage. And finally, we also see, with respect to dental insurance, as there's income and racial disparities. Lack of dental insurance disproportionately affects lower income families and racial minorities. For example, 38% of adults earning under $30,000 annually are uninsured for dental care. Now, I bring this to everyone to the forefront to just see to outline what kind of need there is. Dental insurance, and I say this as a child of a dental hygienist, is so important to a person's physical health and how dental health relates to a person's entire physical health. It is so important. So if you are thinking about dental insurance and you don't have it, again, I would encourage you to go to IEEE-insurance.com and read a little bit more about our plan, because this is some important stuff we're talking about today. Jonathan, let's go to the next slide, please. This next slide is basically some 101 stuff about basics of dental insurance care. So dental insurance, It really categorizes services that cover at different levels. So, and many of you, I'm sure, already know this, but there's preventative care. So this is going to include your routine exams, cleanings, x-rays. Most of this is covered at 100%. Basic procedures. So this tier includes services like fillings, root canals. That's never fun, but there's coverage there. And simple extractions. Usually that type of coverage is going to cover between 70 and 80% of the cost after your deductible is met. Major procedures, so crowns, bridges, dentures, oral surgery, there's normally coverage for that, usually comes in around 50% coverage. And then a very popular thing, and it's something that I just went through with my son, orthodontia, coverage for braces. For those of you who had not paid for braces recently, this is not a cheap exercise at all. I mean, this can range anywhere from $8, $10, $12, $15,000 depending on the type of orthodontia that's needed for your child. So making sure you have some sort of protection, something to think about. Do we want to go ahead, Jonathan, and go into the next slide, please? This is, again, one of my good news slides. So IEEE, AMBA, and MetLife have come together and provide a dental plan available to IEEE members. This plan, again, it's underwritten by MetLife. It's one of the largest dental providers in the United States. It provides the opportunity for you to visit any of your dentists, but there will be additional savings when you visit participating dentists. So it does function as more of a PPO, but it is still there for you if you want to save extra money, see a dentist that's part of the network. But I think most importantly, and again, you'll see kind of a schedule of benefits in the right-hand column, and I'm glad to let you know that, everything we've talked about, there is some form of coverage through these plans, whether it's in our low option plan or our high option plan, also covering things like orthodontia. So that has been made available to IEEE members. But I think also what's really important is, and IEEE, AMBA, and MetLife are very insistent on this, we provide members access to educational tools and resources. So you would have an access to the oral fitness library. You can do oral health risk assessments, dental health content, read on that. There's some really good stuff out there, especially when it comes to children's dental health. So again, bringing these products to IEEE members has been, it's been one of our great pleasures, and we really feel that IEEE members should have that opportunity to research this, IEEEinsurance.com, and see if there might be a product or a solution out there that's right for you and your family. Having said that, let's go ahead, Jonathan, if you don't mind. We're going to turn to the kind of one of the final areas, and we're going to talk a little bit about professional liability insurance. Now, before I go any further, there is one critical piece that I must tell everyone. The IEEE-USA is going to be hosting a professional liability risk management focused webinar in early December. So please watch your email. Go to IEEE-USA website. There's going to be more information coming on this. This is going to be just a best-in-class webinar that I think is, when we're talking about risk management, that many of you will find very interesting and educational. So more to come on that. For purposes of today's webinar, I'm going to just kind of give a general overview on professional liability insurance. I'm sure many of you know what it is. Many of you have it. Maybe many of you have the IEEE sponsored plan, or maybe you have it through your employer. But for those of you who really don't have a feel for what professional liability insurance is, it's a type of insurance that really protects professionals against claims of making errors in their work or failing to perform their professional duties, which ultimately causes a financial loss for their client. And professional liability insurance can help pay for defense costs and damages in the event of a covered claim, pays damages awarded in a lawsuit, and usually covers bodily injury and property damage if the claim is a result of your negligent design. Now, many firms require that their consultants or subcontractors carry this line of coverage. One thing that's specifically important to note is if you work for a company, most likely that company, you are covered under their professional liability coverage. However, it is also important for you to understand that if you are doing, kind of consulting, you're moonlighting, providing services outside the scope of your own work, you're going to need some sort of level of coverage. And I think even more, and this is not a scare tactic, in today's litigious society, someone told me this a long time ago. Anyone can sue anybody for anything. So it's important to make sure that you're looking at some of those professional liability insurance coverages to provide you with that safety net in the event, something goes wrong. It's always important to have something there to catch you if there is a fall. Jonathan, let's go ahead to the next slide, please. So if I were to boil down professional liability, I look at it in three different buckets. What does professional liability help prevent? What does it help create? And what does it help protect? So what does it prevent? It prevents a loss of time and a loss of money. What does it help create? Simply the opportunity for new projects. As I said earlier, many firms require their consultants or subcontractors carry this line of coverage. It helps remove unplanned liability for your clients, and it supports your expertise and sound business practices. So that's what it really helps create. And what does it help protect? It helps protect damage to your professional reputation, whether it's a negligence claim, misrepresentation, violation of good faith, inaccurate advice. All of these would be subject to litigation, and all of these would be something that the professional liability insurance plan would help protect you from. Jonathan, next slide, please. When we're talking about professional liability insurance, a lot of individuals, it's like, what do I need to consider when I'm purchasing a policy? You need to think about things like policy deductibles, limits of liability, self-employed or firm coverage. Is it a preferred discipline? Projects and services, claim history, and then just professional track record and business practices of the company itself. These are just very key fundamental block and tackle things that you need to think about when you're trying to purchase a policy. Now, here's the good news again, everyone. The good news is that the IEEE sponsored PL program brings to it a number of different highlights. Number one, it's ideal protection for firms or self-employed individuals. We have a negotiated members-only rate. It has various deductible options, prior acts, commonly known as tail coverage. It's claims-made coverage. It provides protection from computer exposures, drone coverage, shared office space coverage, expert legal counsel representation. It has licensing board defense coverage and risk management services. So really, the plan that is sponsored through the IEEE member group insurance program, I would really encourage everyone, if you have some time, go out to IEEE-insurance.com and take a look at it. We have representatives that are available. They stand ready to help assist. We have licensed underwriters that are able to give you some guidance on this. But again, this program is so important to protect an individual's business and professional reputation, that I think it's just critical that we let everyone know about this. Again, IEEE-insurance.com, you'll see in the lower runner there, that's our website address that you can really go and kind of kick the tires on this product. But all of these products that we talk about are just so critically important. I think the other thing that's important to mention to this group, having been part of the IEEE relationship for so many years now, these are programs that IEEE is insistent on constantly evolving and constantly making sure that it is, and I use this, I kind of use this term loosely, but keeping up with the times. So these plans are constantly being evaluated. They are being looked at by all parties involved to make sure that you get the best product that is out and available on the marketplace. Having said that, I know we're getting short on time here. Jonathan, if you'd like to go to actually the next slide, we'll talk about the IEEE member group insurance program. I kind of talked a little bit about it 30 seconds ago, right? But the IEEE member group insurance program is more than life insurance. It's more than dental, and it's more than professional liability. For individuals who aren't familiar with the product, the insurance I said product, I'm sorry, the insurance program, it also offers accidental death and dismemberment coverage, long-term care insurance. There is a whole host of different options out there for you to go ahead and explore. I think what's really critical to know about this is, again, like I said in the beginning, this program has been serving IEEE members for over 60 years. And I would encourage everyone to go and out and visit not only IEEEinsurance.com, but visit the member benefits page on IEEE.org. I mean, there are so many different ways to save money and take advantage of the IEEE brand and the power that its almost 500,000 members bring to this. If you're not looking at it, please go out there. I think it would be very helpful, and I think you would be really, really surprised and pleased at what you have access to through your membership dollars. So that said, that's really the IEEE member group insurance program in a nutshell. Final thing I'll leave everyone with is that if you do have questions, feel free to call us at 1-800-493-4333 at any time. Our benefit counselors would be happy to speak with you. Keep in mind that every product that I've talked about today, these are general guidelines. If you have specific questions, I would encourage you to consult an insurance agent. I would encourage you to consult a financial planner to make sure that what you are choosing and what you are selecting is right for you, your family, and your lifestyle. But again, I want to thank IEEE-USA and our partners at IEEE for having this webinar. If there are any questions, happy to answer those. And I know we're short on time. I know, Jonathan, you're going to make available my email address so we can have a one-on-one conversation if needed.
Absolutely. Thank you so much, Graham. Folks, so we are now at the Q&A portion of the webinar. We'll be taking a few audience member questions. Please post your questions in the comments section and we'll load them onto the stream for our speaker, Graham, to address. We did receive some earlier in the webinar that might have been answered at a later point in the presentation, but we'll go ahead and address them again for our viewers who joined late. So Graham, just wanted to go start with this first question received from our audience member, George, who I believe is an IEEE member. George asked, what are the advantages for having a trust?
What are the advantages for having a trust? Now, George, I would tell you that with respect to the legal implications of having a trust, there are significant advantages, and I don't really want to speak in too broad of a palette here. I would encourage you with the tax implications and the advantages of entrusting policies that you work with a specific financial planner on that. Again, it's very subjective to the individual. Trusts are very beneficial, but it's something that you want to have a specialized opinion on and go through, like I said, a financial planner to help you make those right decisions.
Thanks so much, Graham, and thank you, George, for the question. And folks, just as a reminder, and I know Graham just mentioned it earlier, but we have included his contact information in case you would like a personalized consultation with Graham or any member at AMBA or the member group insurance program. Please be sure to reach out to them if you have any specific questions. They'll be more than happy to assist you. Graham, this next question from our audience member, let's see. So actually, George did follow up with another question. Are there any insurance options for someone who is 77 years old? And I guess let's go, if we can make it a little bit more broader, maybe around that age, maybe even after retirement age.
You know, it's a great question, George, and I appreciate that. The cold hard fact is individuals who are in the higher age categories, I mean, some coverages are just not possible. When we look at coverages like long-term care, when we look at life insurance, it's not that the coverage might not be there. It's that the medical underwriting associated with obtaining the coverage becomes prohibitive. And as you know, I'm sure you know this, with respect to mortality and morbidity tables, the older we get, that's it becomes just more, life becomes difficult. And having said that, insurance companies are, with their underwriting procedures, really kind of make it, I shouldn't say impossible to obtain, but if you were to obtain it, then it becomes a price point play. And with that, and especially with long-term care insurance, getting a long-term care insurance policy, that's something that individuals would want to have between, you want to get it when you're 30 or 40 so you can pass underwriting and pay a modest premium. I would tell you that a lot of products, it just becomes simply impossible to do. There are some products out there like accidental death and dismemberment that, even that, while the price points might be cheap, you'd only have common carrier coverage. So you would no longer have coverage if you were to have an accident and maybe like fall down the stairs and hurt yourself. It would only be available if you were traveling on a plane. So it's a great question. It's just one of those things that how these insurance products are designed, it just becomes a matter of underwriting and then also price.
Fantastic. Thank you, Graham. And thank you again, George, for the great question.
Yeah, thanks, George. That's a great question.
So Graham, our next audience member question, Richard asks, does IEEE or AMBA offer medical insurance plans?
I'm sorry, so Jonathan, I beg your pardon. You cut out there for a minute. Help me.
Apologies. Our audience member Richard asked, does IEEE or AMBA offer medical insurance plans?
So as far as the insurance coverage is concerned, now I want to start by saying that we have had, in the last 15 years, especially with ACA, all of that, it has been a challenge to find quality, affordable health care. So right now, I would tell you that no, the answer to the question is we do have access. We do provide access to telehealth services. We do provide access. We have prescription discount cards, but unfortunately, we don't have a major medical policy that that the IEEE and AMBA sponsors. What I would tell you at this point, if you are looking for coverage, I would do one of two things. Number one, I would work with a local insurance agent to see if they can find coverage for you. Or obviously, you can certainly look at state exchanges. I know that kind of leaves a bad taste in a lot of people's mouths, but those are really the two best areas to seek health insurance coverage. I'm sorry I don't have a greater answer for you. It is something that we and IEEE continuously have constructive conversations about, but I think all parties are of the mindset, if we cannot find best in class, if we cannot find something that is affordable, and that is just so important, especially as we're starting to see healthcare cost, I'm going to even use the phrase skyrocket, even on a year-over-year basis beginning 2 years ago. That challenge and that mountain becomes even more difficult to climb. But we have those conversations. If there is something that we find, obviously IEEE will be very involved in this, and the members will be the first ones to know once we're in a position to offer that. But right now, we just simply don't, unfortunately.
Pardon me, I was muted. Thanks, Graham, and thank you, Richard, for the question. So, Graham, I believe that's it for our audience members' questions. I know we're reaching the end of the webinar, so I just wanted to close it off with this one final question to ask you. Financial planning can feel overwhelming when you're starting out, and insurance often isn't the top of mind. So what guidance would you give to or offer to younger professionals who are beginning to think about protecting their future, especially those who may not know where to begin?
So my advice would be to any young professional out there is take this seriously. Take it extremely seriously. Understand that protecting your future, protecting your income, providing a source of income for your family is so important. And when you're younger, at least I know when I was 22, 25, 30, life insurance, health insurance, it was all boring stuff. It was just boring stuff. If I had to choose between a 56-inch flat screen TV and a life insurance policy, I know what the choice I would make. But again, you know, the older I get, I would say it is so important to be thinking about these things now before it's too late. One minute you're 35 years old, you're building a career, you're starting a family. The next thing you know, you're retiring. And if you're not planning for that, if you're not thinking about life insurance, if you're not thinking about disability, if you're not thinking about things like long-term care, you are doing yourself a great disservice. So take it seriously, have plenty of conversations, get plenty of perspectives on this. Do not be afraid to ask questions of your financial planners, and you will then begin to build a foundation. So in 20, 25, 30 years from now, you can look back and go, I am so glad I took the time to do that because I'm in such a good place. You really don't want to ever put yourself in a reactive position when it comes to this type of planning. So that's really the advice I would give.
Absolutely great insight. Thank you so much. All right, everyone. So unfortunately, that's all the time we have for today. Graham, thank you so much for joining us today and for sharing your valuable insights as always. We always love having you with us. So thank you so much again.
Thank you.
And thank you to our audience and for tuning in and for your great questions as well. Before we wrap things up, we'd like to extend a heartfelt thank you to our webinar sponsors, AMBA and the IEEE Member Group Insurance Program, for making today's session possible. Their ongoing support empowers IEEE members to take charge of their financial well-being through exclusive, high-quality insurance options tailored to professional needs. Whether you're just starting out or planning for the future, their offerings are designed to help you build a more secure foundation. Be sure to explore all the benefits available to you as an IEEE member. If you enjoyed the content presented in today's webinar, please be sure to check out our extensive catalog of other presentations and publications available on demand on our website for your viewing pleasure. And if you haven't yet, be sure to like and subscribe to our IEEE-USA social media channels. And don't forget to check back daily for updates on upcoming events. Have a great day, everyone.
Your IEEE membership means access to insurance products featuring exclusive group rates, flexible benefit options, and portable coverage that stays with you throughout your career. Engineered to help protect your loved ones and your financial security. For more information, go to IEEEinsurance.com.